Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, so the sterling is basically nearing a 3-month high according to Reuters. So UK consumers seem to be more beat. Now obviously we've got Black Friday and Cyber Monday sales going on at the moment. So the pound rose basically this week, nearing its highest in almost 3 months, right? So that is basically lifted in part by a broad-based retreat in the dollar, but also by a rise in the UK bond yields after this week's budget update, including a forecast of higher government debt issuance. Now, also bullish for sterling was a reading of consumer confidence earlier this week that showed people in Britain turned more optimistic about the outlook for the economy and the personal finances this month. Although sentiment is long off where it was before COVID, basically in 2019. Now, sterling rose to a high of 1.2575 on Thursday, taking advantage of lower trading volumes because of the US Thanksgiving holiday to make inroads against the dollar. So by Friday, the pound traded around 1.257, up 0.28%. Against the euro, sterling was up 0.2% at 86.84 pence. Currency markets are caught up in shifting expectations for the timing of the first central bank rates cuts. Money markets show traders believe the Fed could move as soon as May, while the Bank of England is expected to cut, potentially later and by less. Okay, so this in theory should support sterling, but if concerns among investors is over the economic outlook, that complicates the picture. Trade Nations senior market analyst David Morrison said it's very difficult for the Bank of England in particular because the economic data hasn't been great. So it's a bit like the Eurozone. Growth is pretty, tepid at them, and yet inflation remains, way above target. He said, "Just don't see us escaping a recession here. That's in my bones." Right? So early this week we had the Chancellor of the United Kingdom, Jeremy Hunt, who gave his autumn budget statement. So basically, he unveiled a series of tax boosts to support the UK economy, but estimates of both growth and inflation were more pessimistic than previously forecast. Headline inflation subsided to 4.6% in October. A year ago it was at 11%, massive difference. But it still is double this, but basically you see that the target of 2% and well above consumer inflation rates in either the USA or the Eurozones. Now the Office of Budget Responsibility, that's the UK's budget watchdog, forecast inflation to reach 2% in 2024, compared with the forecast of 0.9% in March. Separately, the Debt Management Office cut its issuance remit for 2023-2024 to £237.3 billion, right? So it was £237 billion previously. The £500 million cut was smaller than any primary dealer predicted in the Reuters poll, which has sent 10-year gift yields of 20 basis points this week, the highest since November the 14th. If we start seeing some bad GDP numbers and if we start to see unemployment going up, given everything else, you've basically then got the Bank of England maybe having to cut rates, Morrison said. Data from the market research firm basically on Friday showed UK consumer confidence index was stronger than anticipated in November, increasing to a -24 from October's 3 month of basically low of -30. So November's reading was above the -20 forecast in the Reuters poll of economists and follows a sharp fall the month before. So recent ups and downs in confidence have underlined the nation's topsy-turvy economic mood, as basically encouraging news about falling inflation and wage growth is offset by high personal taxation alongside costly fuel and energy bills. Joe Staton, so the client strategy director, said, "Okay, people, that's this article today around the sterling, which is nearing a 3-month high at the moment and slightly more upbeat in terms of the UK consumers." Anyway, please do like, share, subscribe, comment below, let us know what you think. Please support the channel by joining the channel by clicking the join button, sponsor Patreon, link in description. Don't forget to subscribe, click the notification bell. Catch you on the next one.